Now on to today's market movers with easy to follow futures and options trades from CME Group.
Welcome to Market Movers. I'm Jim Iuorio, and today we're focusing on a combination of factors that may influence risk appetites over the next few days. We have stocks attracting headlines over record highs. We have Jay Powell's speech at the Jackson Hole Summit, and we have the president's inner circles having legal troubles. We're looking at using weekly E-mini S&P options to either hedge risk or create additional trade opportunities. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
So I just mentioned three things. We can also throw in the FOMC minutes we saw today. Kind of were a little bit ho-hum. So four. But of those, let's say basic, the three primary things, what's the most important?
Well, so far, Jim, I believe it's the Fed, in the sense of how the Fed is going to play into the following issues, which is obviously the comments from DJT on raising rates too much and too fast and whatnot, but also the backdrop, too, of what I think is a meandering economic situation. You know, one step forward, a couple steps back, a couple steps forward, one step back, as how the economic data is coming in somewhat unequivocally right now.
So Jay Powell speaks on Friday. We've heard Donald Trump's pressure on him. Do you believe, from a psychological standpoint, that he's more inclined to lean into it and be the hawk that he was last week, or is he going to acquiesce to the pressure?
I think he's going to lean into it because I believe that's the right thing to do. Yes, it's tough in today's world to think about a Fed that is going to be hawkish and take away that liquidity punch bowl, but it's got to be done based on where I believe we are.
I like that. Now, before we dive into our trade discussion, I'd like to point out, with all market movers, it's important to view these as examples that allow you to see different ways to use futures and options products to either manage risk or create additional opportunities, not as recommendations or advice. Prices and movements will vary. When we price these out, the SEP E-mini was trading 28.64. Scott.
So, what a beautiful picture the S&P, Jim, is painting these days, isn't it? I mean, you know, when I look at the charts, we always talk about when we go into these trade examples, looking at the charts and just seeing what the charts tell us right away. That's what I like to do when I enter a position like this, and it just looks like a beautiful thing, doesn't it? Which usually when things are going to go wrong, by the way.
Yes,
but
no doubt.
Today, just looking at the charts and looking at where some of the options pricing was, I do believe this is a market that's positioned to go higher, and therefore I found something interesting I do want to tell you about right now. Specifically, looking at buying the August end of the month, so it expires August 31st, 2,900, 2,950 call spread for just a teensy 2 ticks. Cost you about $100 to put it on with a trade potential exposure of 2,400 if it fills out. Because of the fact, Jim, that I believe this is a market that's positioned to go higher. Yes, that call spread, by the way, which it is, was a little bit out of the money. It's pretty far away, but I believe this is one of those trades you can put on and manage it as maybe it starts to fill out, starts to move closer to that range, and maybe just take it off or take some profits if you get them.
So clearly you're looking for, well, an explosive move.
Yes.
Or you lose money, which you're not putting out that much.
$100.
So it's 35 ticks above where the market stands right now. It's 50 ticks wide. I get it, and what the market's telling you is you'll probably lose your money, but if you don't, you could make a good deal of money.
That's right. And if it moves your direction, this is one of those situations where you could obviously manage a trade, bring it closer, push it away, and double or triple your money in a blink.
Yeah, I like it. I'm also going to give a bullish example, too, because I liked the way the stocks fought back after the Tuesday where the Manafort story broke, the Cohen story broke. It seemed like stocks were, and then all of a sudden they fought back. So I think to me,
VIX is telling me
I think things still look pretty good. So I'm looking at buying the same expiration date. It's the August end of month, the 31st. Now the 28.75, 28.90 call spread for 5 ticks. Two vastly different ways to look at this. Mine is only 10 ticks away, but then you pay for that. You pay 5 ticks, so you risk 250 to make a potential 500, but it goes off the same day on the 31st. Thoughts?
I like it. The exposure's good as far as the direction. And I believe, you made a good point about the timing. The fact that you're so close here to expiry, it may be one of those situations where even on both of these exposures, you want to manage this one pretty close. Because when I don't have a lot of time in my trades, Jim, that's when I tend to watch the expiry and watch actually the options exposure and see how they trade. And if they trade to a level I like them, I'll close them out.
VIX is trading 12 and change. What's around your VIX level where you turn into more of an option buyer than a seller?
Gosh, man, I'll tell you, the VIX has been telling you a lot of interesting things, which is too much complacency. So if you get a nice boost in the VIX, I think that's when you may have to start changing your stripes as how you're going to position your options.
12 was my answer.
12 is
a shorter
12
answer.
12 isn't bad. I'd say 11.50. Okay, if we're going to go
Thanks
that
for
route.
joining us on Market Movers. I'm Jim Iuorio, where we're trying to help make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.